Hello from Tinderbox in Aberdeen. This is one of our favourite coffee shops, so we thought we'd come here today to record a video, just for a change from being in the freelance world or the creative space, give you a change of scenery as well. Today we're going to talk about sole traders. When you set up in business, a sole trader is the simplest and easiest way to start. And for someone that's earning less than £40,000 a year, that's probably the most tax efficient way as well. You're not going to have to set up a company, you don't have all the administration that goes with that, you don't even need to set a bank account up, you simply need to keep a record of your income and your outgoings, and then at the end of the year, on the 5th of April, we tally all of those up and we prepare a self-assessment tax return. When you decide to set up as a sole trader, the only real obligation you've got is to register with HMRC. You can do that via their website, or if you come to someone like Freelance World, we can do that for you. The other thing you need to do is start making payments of national insurance, which again you can do with HMRC or Freelance World will help. And you can make those payments monthly by direct debit. As I say, when you get to the end of the year, the best thing to do is prepare a set of sole trader accounts which will show your income and your outgoings for the year, and what's left is your profit. It's that profit you're going to pay tax on. And it's that profit figure that will go into your self-assessment tax return. We're not going to you don't send those sole trader accounts to HMRC or anybody. They're for you, they're for your benefit, so you can see where you've spent money and what you've brought money in for doing, but it's the profit that goes on that self-assessment tax return. One key thing that people get confused about is, as a sole trader, you don't have a company. People talk about their company, but they haven't got a company. You're a business, but you're a sole trader. You're only a company if you've bought a limited company and you've got all of the paperwork and administration in place for that, and that's a much more cumbersome and expensive route to go. And for people earning less than £40,000 a year, it's really not worth it. But we have another video on limited companies, so if you want to find out more about that, you can watch it. But as a sole trader, as I say, simple, straightforward, no bank account necessary, self-assessment tax return at the end of the year, which sometimes people will talk about as a personal tax return. It's the same thing, that's it. And that's a sole trader. Goodbye.